let's now move to cement. Neeraj Akhoury, MD at Shree Cement, joins us on the show right now to talk about how their quarterly performance has been. Neeraj, hi, morning. Good to have you on the show. I want to first talk about your blended realizations, which have seen a fall of about 6% on a sequential basis, whereas your peers reported a fall of about 2 to 3 odd percent. Tell me what led to this dip in realizations for you more than the industry average?
Good morning. Good morning. I think one of the reasons that led to a higher realization drop for us is around our geo mix. We have been now selling little more in east and in south compared to north. So it's just a geo mix change that has impacted the prices. I'm sure in the next quarters we'll be able to make it up.
Okay. Q1 was weak for you, as we understand, owing to the elections as well. Q2 seasonally itself is a weak quarter because of the monsoons, and hence prices have moved nowhere. In fact, what we are understanding is that prices are near 3 to 4 year lows, and there is still no clarity on price hikes post monsoon as well. Are you confident that the industry will be able to take price hikes post monsoon at all?
So the way I see that, a lot of new capacities will be commissioned in this financial year. And whenever new capacities come in, there is a time for stabilization. There is a time when the new capacities make their place in the market. To that extent, I would be very cautious on my price forecast. And so beyond the monsoons, I think it will be industry level in new capacities that will create some amount of subdued price forecasts.
Well, the recent bout of M&A changed things for the sector.
M&A, the consolidation does help in the long run. Even what we are seeing is a rapid increase, but let's not forget that about 200 million tons of capacities have changed hands in the last 10 years or so. So M&A is not new to the industry. But having said that, last 1 year we have seen acceleration of this consolidation, and in the long run, it will augur well with the industry.
Cement prices in last 4 or 5 years, by and large, have been flat. They've not even gone up in line with inflation. But if I look at every cement company, Ultratech, Shree Cement, Adani Group, they're talking about capacity addition. So if prices are not going higher, capacity utilizations are low, why is everybody adding capacity?
I would not say that. The industry average utilization is still around 75%. A new capacity to come up takes roughly about, on a greenfield, not less than 5 years and 4 to 5 years. So if you have the resources, one would like to embark on the capacity expansion. Do not ignore the fact that India is growing roughly by about 8 to 10% on demand, which means every year about 40 odd million tons of new demand is getting created. And therefore, that will make many producers to make sure that they do not see a market share loss, and hence capacity addition will be done.
We just looked at the coal prices, and we were having a discussion with the management of Tata Power, and they are indicating that coal prices globally have come down, and this is benefiting their thermal capacity. But we don't see that advantage coming in terms of cement, sector. I mean, not just Shree Cement, but everywhere the coal price benefit should have translated into higher margins for you.
So for Shree Cement, if I compare with last year's same quarter, our fuel cost has come down by about 17%, from 1,304 per ton to about 1,081 per ton. So coal prices have helped us to manage our costs better. I'm sure this will be reflected in all the industry balance sheets.
When we spoke to Mr. Bangur last and asked him specifically that, look, it's good to talk about acquisition, but ghar ka khana sabse acha hota hai. We want to expand what we understand. So would that be a stated intent that at a time when a lot of other corporates are buying, acquiring, you will not diversify?
No, it's not that we are against acquisition, but it has to be a strategic fit. We should be able to add value to that asset which we acquire. But we sincerely believe and strongly believe that ghar ka khana acha hota hai, which means we will continue to focus on our own organic growth. Even for this year, we would be adding about 15 million tons of new capacity in FY25. So that will be our focus. That will be remain our main area for growth.
So by next 3 years, how much of your expansion plan would be commissioned in terms of a pure capacity which would be operational?
So by next year, March, we hope to we hope to become roughly about 72 million tons capacity. And in the next 2 years after that, we have given a goal of 80 million tons. So we should be able to do 80 million tons by FY27.
Right now, you shared a number with us, which is that the capacity utilization is between 75 to 78% for the industry, depending on the plant and depending on the quarter you're looking at. Do you see the capacity utilization moving up to north of 80-85% on an expanded base in next 3 years? I mean, is that coming?
I see about 80% coming for sure. I see about 80% coming for sure in the next few years. But 80% will be the ideal capacity utilization levels that the industry will operate.
The cement sector, supply and demand always have been, supply has always been more than demand. At least that's my understanding of last 10, 12 years whenever I track the sector. Will that remain like a phenomenon?
So I'm very clear on this that not only in cement but across sectors, surplus is the name of the game. I don't think we will see deficits anywhere. There will be surplus, 15-20% surplus capacities in cement is something that I see even going forward. But then it's a very seasonal product, so there will be quarters in which utilization levels will be much higher than 80, and some quarters where it will be lower. Yeah. So overall, I do see that utilization levels will move from 75 to roughly about 80% in the next years. Yeah.
Look at cement data, and again, last question. I'm looking at the data, what has come in terms of the dispatch numbers with last available data. And I think you also have it handy with you. The sector is not growing even at nominal GDP. When India is going through this unprecedented boom of construction, government spending, roads, bridges, a sector like cement should grow higher than the nominal GDP, or at least in line with nominal GDP. Why is that?
So last year, the growth was at about 12% last financial year. So this is not a right comment that we are not growing in line with the GDP. Even today, the multipliers are positive compared to GDP. There are quarters in which the demand would be somewhat lower, but overall, I think the growth trajectory remains strong. Even for this year, when I see the budgetary allocations that has been announced by the Honorable Finance Minister, it augurs well with the cement demand. So over the year, we would see a stronger demand.
So with one final summary, and I'll summarize it, and please correct me if my interpretation of my summary is wrong. You expect the cement sector to grow in line with a nominal GDP, headline number one. Headline number two, Shree Cement is a very efficient cement company, a group which always has prided in better margins and better cost savings, so you will be higher than the industry average in terms of margins and everything. You expect the capacity utilization to grow north of 80% in the near term. And given that raw material prices have come down, for the industry and for Shree Cement, there is scope for margin expansion.
Yes, I would say that, except for the pricing scenario that would be not as strong as one would expect it to become because of the new capacities, as I said. So except the erosion will come from price and not from the cost.
All right, Neeraj bhai, appreciate your time. So glad you could join us.